Welcome. My name is Paul Wallace. I'm a capital markets writer and the Africa editor at The Banker magazine, and I'm here with Jerome Booth, an independent economic analyst and founder of the new Sparta group. Jerome, thanks for joining us.
Nice to be here.
If you were the finance minister or central bank governor of a big emerging market, what would you be hoping for at next week's IMF meetings in Washington?
Well, if I was a realist, I probably wouldn't be hoping for very much. I'd probably be a bit annoyed that after decades of the IMF being very tough on the emerging markets, and in many cases quite rightly so, I'm a big supporter of the IMF, it now appears to have got itself entangled in a wholly inappropriate way with Greece in particular, and not really doing what it should be doing, which is giving some tough but friendly and needed advice. The problem that I would like the IMF to address is the international monetary system, which is broken. We have a system today which is far too centralised on the money of one economy, and there are lots of arguments why we can't change this and it's the most liquid. Well, there's a word for a start. Liquid. Liquidity, we know, can be very high and then disappear very suddenly. And what's interesting about liquidity is this can happen particularly in markets where you think it's not going to happen. There are several, if you like, warning signals for liquidity to go down suddenly. One, a misperception of risk. So I ask you, why do we call something risk-free? There is no such thing as a risk-free investment. It's a complete nonsense. It's an abuse of the English language. So that is actually a misperception of risk. Anybody calling something risk-free is misperceiving the risk. Secondly, the structure of investment. And the structure of investment in the US Treasury market is, again, very worrying, not least because central banks are so dominant. And by central banks, of course, I mean the emerging market central banks, because they have over 80% of global reserves. They are the massive creditors. So as a finance minister or a central bank governor attending the IMF meeting, I'm very, very worried about this huge collective action problem. And I want the IMF to start dealing with that. The third, just from my list, the third sort of ingredient for disaster in terms of liquidity drying up suddenly is leverage. And leverage in an instrument like the Treasury is not that relevant, but at the economy level it is, and that's what potentially is dangerous, because you could see a concerted effort by the US government, and in Europe, and here, by the way, to use ways to reduce the debt burden which are not as simple as just paying it off and growing, because we've got such a huge burden. And of course the historical precedents are there. The two most obvious techniques to doing this, aside from outright default, which you don't have to do if you print your own money, is through a combination of inflation, which is basically the route followed in the 70s. You inflate away the debt, and secondly, of course, financial repression. Which is any policy which captures domestic savings in order to fund the government, and to do so at a lower cost to the government, lower interest rate than would otherwise be possible. And that's exactly what's happening, primarily through regulation at the moment.
Okay, but you don't hold up much hope of these issues being addressed properly next week?
I think they're too sensitive. I really think that there's too many people so nervous about this. It's like the emperor's new clothes. I feel sometimes that Bernanke and other central bankers are a bit like the guy saying, what wonderful clothes the emperor has, in the knowledge that they're trying to, they're the ones trying to stitch them up together.
Okay. Tapering and the prospect of a slowdown in quantitative easing will no doubt be high on the agenda next week.
Yeah.
Some people in emerging markets have called on the US Fed to almost see itself as a world central bank and not just the US central bank, and that when it carries out when it makes decisions, it should take into account the likely impact of those on not just the US but the rest of the world too. Do you agree with that, and do you think there's any chance of the Fed widening its mandate beyond?
There is absolutely no chance whatsoever that the US will subjugate domestic policy objectives to international ones. So, well, we can ask for it, but all we're doing is pointing out that the system is not fit for purpose. And instead of asking the US, fruitlessly to try and do something they're never going to do, much better start to work towards a different monetary system. And the answer, a global monetary system, the answer quite obviously is to rebalance it more towards where the economic activity is. After the Second World War, when the US was 50% of global GDP, it made a lot more sense than today when it isn't to have everybody thinking in dollars. We need central banks across the world, starting with those with money, the central banks in emerging markets, but also some of the big, there are a few Western ones with big reserves as well, as we know, to really aggressively, much more aggressively, gradually mind, but diversify their reserves, and to do so in line with where they're trading, where the trade flows are, and where the economic weight is in the global economy. And that's the way to sort of get out of this problem. But to sort of complain that the US is somehow going to look after their interests is not going to happen. So, and actually a lot of this is rhetoric anyway, by the way. I mean, I'm just amazed at the amount of uniformity of the view that tapering is a terrible thing for emerging markets. It's not really that relevant. It's like going out on a day when the weather's not particularly good. You can blame the weather if you like, and if that's the way you want to do it. But the point is, the emerging markets have every policy tool to be able to withstand this. If Brazil or India or Indonesia or some of these other countries that have been buffeted a bit actually chose to have different policies, use their reserves a little bit more actively, they wouldn't have a problem. It's just politically convenient to blame the US.
Jerome, thank you very much.
My pleasure.